Hey guys, welcome back to Sky Talks Trading. My name is Sky and I'm on a quest to invest. Today's video is all about Nio Stock. So today, Nio announced that it has completed its previously announced at-the-market offering, of American Depositary Shares, the ADS, each representing one Class A ordinary share of the company. Through the at-the-market offering, the company has sold 53,292,401 ADS and raised gross proceeds of $2 billion before deducting commissions paid to the distribution agents of approximately $26 million and certain offering expenses. They currently plan to use the net proceeds from the at-the-market offering to further strengthen its balance sheet as well as for general corporate purposes. So that is really great news. And listen, something I've been noticing that it's kind of getting on my nerves is, I'm getting kind of tired of reading these posts about Nio being a target in the eyes of the SEC as well as the regulators in Beijing. And I just got to say, firstly, Nio's accounting is US compliant. The annual report goes into reasonable, pretty good detail about how there was a weakness in internal controls, but that was fixed by the end of the year. And whenever, on rare occasion there has been bad news, Lee has informed shareholders immediately. So I'm very happy with the overall transparency when it comes to Nio. And then on the China side, Nio is not the quasi-monopolistic tech conglomerate, like Alibaba, for instance. It doesn't yield huge influence and control over individual households and persons because their tech penetrates user interfaces and handheld terminal devices. Nio is a small, up-and-coming growth business that provides good services and amazing products at fair value. They're not a threat to anyone, and they are contributing to Chinese society in a productive way. So I don't see why the leadership in Beijing should, start to come after them or target them. So again, this is just my opinion. I'm never giving financial advice here. You know that by now. Let's take a look at the price action. Nio gained 0.65% during Friday's trading session. So they finally managed to end the recent downtrend with a positive day, which is awesome. We know the stock has been struggling since a less than spectacular earnings reports, on the surface anyway, arrived on the heels of a disappointing month of vehicle deliveries in October. So yeah, on Friday, like I say, they gained 0.65% to close the trading week at $38.66 as the stock bounced off the 50-day moving average as a support level. Also, we have to talk about the Nio rival XPeng. They revealed a new SUV model for international markets. That was the big news on Friday. So yeah, the SUV model, which is the G9. Some more interesting news that came from the announcement is that the company is also eyeing a global expansion with plans to head to the United States at some point in the near future. The G9 is slated to be available sometime during 2022 and is meant to be a direct competitor to both the Tesla Model Y and Nio's E28. So, got to keep that in mind. We know that Nio has some, pretty heavy competition. And, so despite closing the day higher, Nio did fall behind in the broader sense of things, in the broader EV sector during the session. Shares of Lucid surged higher by 17.34%. And Rivian gained 4.23%. But some more good news for Nio. Nio is expected to begin taking bookings for ET7 in January. So that's their electric sedan. So they're going to be taking bookings from mid-January onwards. So they're planning to gradually ramp up deliveries from a few hundred units a month initially. And then grow from there. So this is their flagship sedan ET7, complete with its second generation electric drive system. And it's expected to compete with Tesla's Model S sedan. This system utilizes silicon carbide, which is considered more efficient, lightweight, and compact than silicone, just regular old boring silicone. Tesla was actually the first to use silicon carbide among all peers. So overall, things are looking very good for Nio Stock. So I just want to talk really quickly about options trading and how it is poised to possibly overtake the stock market. I think in kind of 2018, 2019 is when retail trading really soared, and it was an amalgamation of reasons, but one of them was, the slick trading apps and social media hype and just how easy it is to A, find information, and B, to actually invest. So stocks were the focus initially, but these days, much of the excitement appears to be in options. Options do offer a cheap way for traders to bet on a stock going up or down in price without having to actually purchase the shares, which, is very appealing, very exciting. And options activity in the US, anyway, is on track to exceed that of the stock market for the first time. The average daily notional value of traded single stock options has risen to more than $450 billion this year, compared with about $405 billion for stocks. The notional value is the trading volume multiplied by the spot price. So another reason why options trading is so popular is that options contain leverage that can magnify investment gains, and of course, obviously, can magnify investment losses, but we won't talk about that. A typical contract gives the trader the option to buy or sell 100 shares of a stock for a fraction of the money it would take to actually buy those real 100 shares of that stock. So yeah, buying and selling options has roughly quadrupled during the past 5 years, the Wall Street Journal reports. And, there can be a real dopamine high that is achieved through this kind of trading. Now, this boom in options obviously could be making financial markets more volatile. So what about you guys? I did see a few comments on my last video saying options is where it's at. Just focus on options for a while. So I don't know, guys. Should I start talking about options trading more on this channel? Let me know what you think. But that's all for today. Thank you so much for listening and have a great day. I'll talk to you soon.